Friday. Welcome back to the Pulver Report. It is 9 o'clock on the 16th. Happy February. Let's get started. It's been a bit of a week. It's been a busy week. We're going live. Let's check things out. Chat's coming in. Hello. Happy Friday, everybody. Let's get cracking. All right. The trading, please and always use trade capital only. You know the deal there. Please and always use just the trade capital. Everything I talk about in all these sessions for educational purposes only, right? Yes. So took a quick peek at the news this morning. Let's go to the calendar. We had producer price index out this morning at 8:30. It came in slightly higher than expected, which means prices are slightly higher from businesses to consumers. The initial pop was dollar strength. We're starting to see that move fade just a little bit. Let's take a look at let's get out of this right here. We're right back where we started, essentially. I mean, I took trades for the week that 502, 502 to the upside, 500 to the downside. We're trading right now at 501. So if price drifts a little bit higher today into the 503 area, I should have a butterfly spread that's looking at some profit. It was already up, I want to say close to 50% from the initial trade. I wasn't going after a huge win. It was like a 20-cent debit that, if it's up 40 cents, 50 cents, 60 cents, that's fine. I'm trying to get a 3-to-1 or better. The expiration's out 2 weeks, but if it drifts up here and it's worth, 2x or 3x return, I'll probably just take it and then start putting some more butterfly spreads in the coming weeks. The Qs, also right back where we started. There was our big break from Tuesday CPI. We're kind of battling back pre-market 435. Has anybody seen SMCI? Oh my gosh. I can't even type it. SMCI, 1,004. Pretty sure when we started talking about it this week, it was around $700. Thursday, Wednesday, Tuesday, Monday. We're talking about a $700 stock that is now over $1,000. We're talking about a year to date that is just up 224%. This is ridiculous. It really is. The good thing is I have an out of the money credit spread that's a like 600 by 590 that I'm collecting like $2 on. I'm pretty sure even if this thing is crashing, I'm giving myself plenty of downward momentum. And I don't think we just have I doubt we have an immediate crash. If this thing is going to start faltering, pre-market even's up $70. It's like, we're talking like GameStop-esque type movement, maybe minus the brick and mortar failure, maybe minus the retail crowd dominating. This is just like big money chasing momentum. I'm sure everyone saw in the headlines or saw on Twitter this week that Jeff Bezos is selling, I think, up to $6 billion worth of Amazon shares. So there's some fishy stuff going on here. And the joke was that he's selling Amazon in order to, buy NVIDIA. NVIDIA continues to plug away, just not nearly as aggressive, right? I mean, here's your year-to-date kickoff. It's up 57%. I mean, unbelievable, right? SMCI up 200+%. It wasn't even on my radar until last month. Talking SMCI, it's just unbelievable. So anyway, credit spreads are in. That's cool. I've got plenty of wiggle room there. And in fact, just with the volatility and the price, how far away I am from, my probably the profit's probably 99% right now. And just an hopefully easy, like $2 of credit per contract, which I'll certainly take. What's going to be interesting is at some point, I think the short sellers or people that are positioned short on SMCI will make a lot of money. I'm just not interested in calling this thing. So I think what I'll be waiting for is either we start to see, a big gap up that we can fade. Maybe this is it when we start to see this type of gap, and looking for some type of island gap. I look to position maybe some long puts there. I would only be trading options on the SMCI. There's no way I'm gonna borrow on margin to short this thing. So if I look at either like an island area here and get some out of the money puts, see if that plays out, or just look at some bear call spreads and put them out of the way. But super high volatility to the upside, most likely high volatility to the downside. We might have a cup and handle pattern. That's a big sign of reversals in stocks, as we just go up super fast, we come down aggressively, and that becomes the neckline right there, that cup line with there's no left structure. And if we break that, there's your correction. All this would be is at some point we'll have a correction. We'll see it play out. But if this is going to trade, to the moon, I'm trying not to fight it. I'm just going to keep doing some bull put spreads way out of the way and see how quickly I can just grab a few bucks. So, yeah, it is what it is. Pretty crazy. Back to the SPY. We're at 501 pre-market, just a little bit off of the close from yesterday. Close yesterday was 502.20, so we're down slightly. Currency strength chart. I'm looking to see. I think I'm actually going to go New Zealand pound. I'm going to try to grab a few more bucks for my 8-cap trading battle this week. It's just I did this yesterday in the flex room. I just can't find a trade that I really like. I did reduce the size of my drawdown with that dollar pop this morning. So the dollar Swiss, I'm still long, and I'm going to hold that position. I think this one's going to be okay. Here's my 8-cap position right now. So I'm still up about $462. I did close out my Aussie dollar. So my Aussie dollar, fudge, man, it is pushing a little bit lower. Let me see if it hits this level here. It doesn't matter because I took the trade off. But I guess if the dollar is going to come back and retest the high, that's what I look for. But I took it off. I mean, I was doing a hedge where I was short the dollar and long the New Zealand. The New Zealand took profit for me, which I'm glad I got out of that. And I also took profit on the euro dollar. So both of those trades, dollar Swiss, I'm looking to see if today into next week, we can get back to these highs where I entered. I'm sitting at 88.66. If I can get this back up to these highs at 88 and change, then this would give me, let's see, maybe 20 to 30 pips. I am curious, could I get in right now? I mean, man, I don't know. I wasn't really sure. I widened the stop a little bit. It would have been nice to just double up in my position, take a lot there. I'd be about break even right now, but double the trade size, double the risk. So I think I'm just going to let it sit, let it marinate, and see if this gets back up to the break even point. If that's the case, I'll take my $500 of profit. If I can let it get another $200 of profit to the upside, that's great. Just not sure how much time I have on the trading battle. I think maybe we have until the end of the day today. If the trading battle team lets us take it into next week, I think this is back up to highs into this profit. So I'll continue to monitor and manage this one, but hopefully, I ideally want to get to $1,000 for charity. All right, who we have in the house today? Denise, good morning. Angela, good morning. Chris, Jane, good morning. David, good morning. Trish, good morning. Lloyd, good morning. Willard, what's happening? Good morning, everybody. Good morning. Good mood. Let's say that. Nice to see everybody. Okay, so let me see what I've got going on for equities on demand. We got a buy trade on the dollar Swiss, flex room. Let's see here. Took on some bull put spreads in the IWM. Let's have a look at that one really quickly. IWM pre-market 201. I closed this out near the highs. I had just kind of a volatility play through FOMC as well as through CPI and PPI this week. It was a 202 by 213. We got up to the highs around 205. Didn't quite tap that alarm, but it was enough that I saw break even yesterday. If traders are following this, I posted the alert. I closed out for about $3 and I paid $3.20. So I only lost 20 cents on the trade as opposed to $3.20 was the max risk. So I'll take my 20-cent loss. I put in some out of the money bull put spreads, which is all the way down to 187 and all the way down to 185. So 187 means IWM has to come all the way back down here, in order for me to lose. Otherwise, I'm going to collect about 90 cents per contract, which totally happy doing. And also, this is the area that we talked about. Broad market wise, this might be a tough task. But if we get into the upside where we make a firm break above 205, there's not much stopping the IWM above this level, right? So if we get above 205, I certainly want to be focused on long for this recovery. I don't think there's necessarily a broad market rally at the moment. If we go to FinViz, the heat map's probably going to be gray, but I'm curious what we did yesterday, or this week rather. So this week, Big stocks have been mixed. Apple's trading at 183. Let's see if Apple's down a little bit, because if it is, that allows my bear call spread to hopefully be in profit. We're at 183.11. Ah, you freaking turds. I've got a 180 by 182.50. Hopefully we push down a little bit lower today and get into, all we need price to be at is around 182. So we need to see about a dollar drop on Apple. If we get there, we should be close to profit, or at least break even. Problem was we got a sign on the bull put spread, and if we're not below 180, we're not going to get paid on the bear call spread. The risk is small, however. I ended up taking an 83-cent loss on the, it's a 250 credit spread, so I took an 83-cent loss, which isn't terrible. And then same thing here. I've got another $1.60, $1.70 running for profit on the downside. If I can close that for a net, net loss, and we recognize this loss. I mean, if we stay in the middle, which as we are right now, we're staying in the middle. And if I take a $1.60 loss, it certainly could have been worse. If I did an Apple earnings play, it would have been a $5 or $6 max loss. We didn't hit the highs. We didn't hit the lows. It would have been close. I don't know if we would have gotten above or below those levels. So I'm happy we took kind of the inexpensive route, but unfortunately, we're probably not going to see a big move to the downside. Microsoft for the week down almost 2%. Oracle down, Adobe down, Google down, NVIDIA up, AMD up, Intel up, Qualcomm up, ADI Semiconductors, Micron Semiconductors. Interesting how those pulled back. Cisco down, MSI down. I don't know. I'm curious, like somewhere on here, where the heck is SMCI? I mean, for a stock that's emerging as just this ridiculous gargantuan rocket, volume is 25 million, market cap 56 billion. Like, it's got to be on here somewhere, right? You'd think it'd be one of these bigger buttons that it's just bright green and like, oh yeah, it's up 100% this week. But I don't even see it on here. So crazy stuff. Eli Lilly still plugging away at 757. That's another one I've got some, out of the money bull put spreads on. So, my idea of chasing momentum is staying out of the way, going for high probability lose a profit, letting these momentums drift, not trying to call tops and bottoms. Tesla's back up to $200. I'm in at 170, 175, 180, 175. Lots of bull put spreads there. Eli Lilly put in a couple. NVIDIA put in a couple. Netflix put in a couple. Meta put in a couple. So that's keeping me pretty busy on the just kind of income generating side. Just staying out of the way, and let the momentum do its thing. Again, where we come up to today, where we kind of maybe peak out, if we hit the highs around 503, I do have a butterfly spread that's a 502.50, or maybe it's the, let me see what my legs are. I put it in, see if I have my equities on demand spreadsheet. Equities on demand spreadsheet right in here. One second, I'm just answering a couple messages on Discord. Okay. Ian, good morning. Laura, good morning. William, good morning. Murray, good morning. FK and Ann, good morning. Nice to see everybody. Happy Friday again. I want to take a look at the equities on demand. We did a butterfly spread. Here's the tracker. Move this over here. Okay. So butterfly spread. This is the put butterfly spread. This is the call butterfly. Okay, so 503 by 506 by 500. It's in the money right now. It's in the money. If we open up at 502, 503, that's my pin price. Let's see how that's doing. I know that I'm out another couple of weeks, but because we took the trade when price is around 493, 494, that should be worth. I mean, I paid 32 cents for it. Hopefully, it's trading for 50 cents, 60 cents. And again, is that enough to cover my two trades? Well, one was 27 cents, one was 32 cents. If it covers the cost of this one plus 100%, it covers both, but I'm not going just for break even. The idea is I'm going to try to get these to pay a little bit more. Try to. If I thought that, well, there's maybe a little bit more momentum to the upside, I might look at like a 510 and get up here a little bit higher. I could do, something out of the money again for next week, do like a 5010 by 513 by 507. If we're going to melt up a little bit higher, pay it probably another 15 to 20 cents and see if that pays out. If we stay where we are, I'll give this a chance to maybe, oscillate here on that 500 handle. And if it does that, more time in that 503 by 500 by 506, it's just a mouthful when you talk about the butterfly spreads. We'll see if that one just ends up paying more as it kind of dances around that 500 level on the SPY. Okay, so we'll keep an eye on that one for equities on demand. Other than that, like I said, I'm safely collecting some income way out of the way. Tesla's had a nice move to the bottom, starting to fill that gap. We started doing some credit spreads down here. Nvidia got out of the way. Microsoft, Netflix, just staying out of the way in a lot of those stocks. Okay, just bull put spreads. Price on Microsoft would have to come back down to like 390 or 385. I think we're fine there. I also did an iron condor, which I have out to March, 440 by 445. The 395 by 390. Guess what? We're right in the middle. Collected $1.66. This is probably trading for, I don't know, maybe 60 or 70 cents right now. I could check it opening bell, but if I'm up to about 50% of that take profit, I'll grab the 80, 90 cents. So there's a couple of varieties that I've got going on. After some of the earnings plays, looking to see if these markets are going to pause. Apple would be a good one. I think Apple also would be a, pretty decent looking iron condor if we can get, bear call spread up here, bull put spread down below, and Apple just stays in the middle. That could work out pretty well. I'm actually going to look at that one today for equities on demand at the top of the hour. If you have any charts, have any questions, feel free to type them in as always. And let's have a look. So anything else on the currency strength? Dollar's getting a little bit stronger. Dollar Swiss, I'm still remaining long on, so hopefully I can continue to see that plug away to the upside. Trying to think, should I jump into another trade? It's not that far off from break even. I need about 29 pips to get back to those highs. I think it's capable of getting there. Break even would be okay. I obviously want to try to eke out a couple of pips, but I missed my entry. I mean, the idea was we came right back down to that CPI candle. That would have been a gutsy play if I doubled up right there, but I just thought, man, we could really tap. We could tap below that 200 EMA, then come back up here. And you can see all it did was came back down and, came to today's pivot. There's a pivot from yesterday that's missed. So I'm hoping that that's where we're going, is going to find that pivot and then revisit the highs. So I still like dollar Swiss long and longer term. Seeing the Swiss here on the weaker side, this is a good sign as well. Dollar Swiss still going okay for the week. And, I like seeing everything above, and I'm not trading the Swiss yen. So if we've got, the New Zealand above it, that's fine. Euro above it, fine. CAD above it, fine. Let's take a look at those Swiss pairs really quickly. Do I have an automatic money-making robot? Is that a serious question? Do I literally have a robot that makes money? No, that'd be illegal. No, I have robots that make money. I do have robots that make money. Here is, let me go Perfect Storm. Let's see, what browser is this? MyFX book. Oh, come on now. Did I fudge? I lost my links. I lost my bookmarks. Hang on. Let me go MyFX book. All right, so I've got Perfect Storm, Pockets Pattern Pro, Perfect Storm. Okay, so let's see here. Perfect Storm for the week. So John asking the question here. I have my Perfect Storm, which is my original Perfect Storm, which is about a 5-year-old deployment that's been running full auto for 5+ years now, or going in. This is stretching into that 5+ year mark. This week was up 397 pips. For the year's up 2,028 pips. Not too bad. Profit wise, pretty silky smooth. It's still nursing a bit of a drawdown, which it does. It sits in about a 8 to 10% drawdown. Currently, it's down about 13.68, but the account overall is up around 50%. So it's been doing a good job for me. I trade it really small. I let it work its way out of trouble. I don't have to intervene a lot, but I certainly like grabbing some pips every single week. That's, like I said, 397 this week is pretty good. That is the Perfect Storm original. If I go to my Pockets Pattern Pro, that did pretty well this week as well. That's 225 pips this week. So I'm just going to do the math on that. So 225 On Pockets Pattern Pro, that's an efficiency robot that trades back to some of these news candles. Perfect Storm, the original is $397, $397. And then my Perfect Storm Pro is $221. So I'm up 843 pips with robots this week. So yes, it does work. If you're interested in any of those robots, they are available on my Discord channel. You can check them out, read more about them. If you want to see any information, if you want to ask me a question about them, feel free to type it in the group chat. But if you go to the education link in my Discord, I just talked about Perfect Storm Pro, Perfect Storm Original, Pockets Pattern Pro. Those robots run on full auto. This is the reversion robot that I run, and these are both the originals. I do have a trend version for Perfect Storm. I trade the range version. I go after quick pips. I let it dollar cost average in, get me 30 pips. It does it routinely. It takes anywhere between 200 to 300 pips a week. Very common. That's conservative. And I trade it really small. I only trade it on 8 currency pairs. So you've got plenty of margin and never really over leveraging. But like I said, it does average around a 5 to 10% drawdown. So just consider that because it's working through trades, right? It's staying invested, working through trades. But those 30 to 50 pip bumps gets rid of those drawdowns and it just keeps plugging away. But those are great. I have a course that's out today. I'm officially starting the course on it this afternoon called Hypertrend. I have 843 pips. I'm going to keep that aside for now. Hypertrend, I did for the first time ever a full trend and full auto course. I've done a lot of trend systems. I've got great trend systems. I've got Right Trader and Right Trader Max. I have my Master Flex course, Momentum Breakout Max. All these easy ways for hybrid discretionary deployment where we find a trade, find a trend, deploy a system, pockets, or Price Action Pro. All these great robots. Okay, but I designed this one with the intention of trading at full auto. I'm actually finishing up some testing right now for class. I've got another 8 tests to finish up before the 1 o'clock class today. And it just finds a way to win. It's not about, over trading. It doesn't try to buy into highs. It doesn't try to sell into lows. It just tries to confirm on multiple time frames all these nice, clean momentum trends, take them on higher time frames, precisely on smaller time frames, grab some pips, protect some profit, and wait for another signal. So, I think if you're looking at full auto and you're trying to trade trends, you can't trade every trend under the sun because what happens to the markets, you're going to get something like this. You're going to have the market, be noisy at a bottom, eventually start to break out, and then there's your trend, right? And then it gets noisy at the top. That top might become another trade or trend, or it might be a correction. So my system's job is this: filter out all this noise, which it does a great job doing, wait for confirmation, take the buy trade and take this chunk. That's the chunk it goes after. It gives me all sorts of warning signs to get out. It doesn't try to overtrade, right? And then we have indecision here. If it reverts into a sell trade, that's fine. It gets confirmation to sell. So your net profit looks something like this. You might take one trade in here for a stop. Nice big win right here. No trade, big win right there. And it's just high quality confirmed trades because it's just so filtered. Doesn't mean it's inactive. It's very active. I plan on deploying this on, we'll talk about this in class. I'll probably have this running live on 25 currency pairs. I said 28 originally, but as I went through the numbers and did all the testing for the last several years, why would I put the system on something that has performed very poorly in currency pairs that don't like the trend? i.e. Euro Pound, Aussie CAD. New Zealand CAD was okay, but wasn't great, but I'll still deploy it, give it a chance. That one tends to trend a little bit better than Aussie CAD. But I'm just going to take it off the ones that just are terrible. So if I run it on 26, I increase my profit factor, increase my win percentage. That's a pretty easy deployment for me. Okay. If you're turning 50% prop, because the drawdowns, questions coming in, if it's producing 50% profit, why don't you increase lot sizes? Because if I'm managing a 10% drawdown and increase trade sizes, why would I want to carry a 20% drawdown? I don't. So I keep the trade sizes small. I just let the robot do its thing. I don't need to lose sleep at night because my robot's trading too big to get me in drawdowns. So I take small trades so I can have manageable drawdowns, and I just let the thing produce profits. That's all. That way it's very easy for me to maintain and manage. I don't get emotional with my robot. I don't think it gets me into much trouble. I can manage that. Fair. When is where classes today at 1 p.m. Eastern time. And Hypertrend, if you're interested, if you're part of Market Traders, you can contact educational specialists to get involved. I know there's some promo stuff with, I've got some bonus sessions and VIP sessions running through Q1, Q2, so you can check those out. Larry says, I have Apple 216 180 call that was sold, still remaining. You have a 180 call. Why do you not have both of them? Do you still have the 180 by 182.50? I'm hoping you still have a spread on that, right? So if you have the 180 by 182.50, if it finishes above 182.50, then there's nothing to do. They expire worthless, and we're going to get out of the trade for a small loss, like 80 cents. If it comes down below 182.50, it's not going to take much to get us into profit or break even or better. I want to see where this one goes. I still have the 180 by 182.50. If it drops today, maybe $1, and we get to 182, we may not be profitable, like I said, but a break-even trade where the net loss here is about 80 cents. And what I'd like to look at instead is maybe over the next 30 to 40 days, I'm going to look at a bear call spread, bull put spread, see if Apple wants to go sideways and get a little iron condor action on there. Oh, you were assigned. Okay. So, Larry, were you in class with us yesterday? Because I was assigned, but you should not have been assigned the 180 by 182.50. We're close to that trade working out. If you're going to get assigned, I would have imagined your assignment was going to be the 192 by 190 bull put spread, because we were dropping on Apple, and that's where the assignments came in. So if you're assigned on that one, you're assigned at 192.50. Close out your 190 put, and then close out the shares. We ended up taking a loss of about 83 cents yesterday. So that one's done. The other trade should still be active. We're much closer to being, at the money on that 180 by 182.50. And to finish out of the money, we need price to go lower, right? Yeah, so the 192.50, that was assigned. You can manage that one today. You should know what to do there. Close out your long put, close out your shares, take your net loss. It's going to be small. We collected like $1.60, $1.70 on those credit spreads. So you should only be losing like 60, 70, 80 cents. Okay. All right. Okay. So that's Apple. Murray, does that make sense? Or you got the idea for class? It's 1 p.m. today, Eastern time. Producer, you got the idea for 50% profit drawdown. Why do I trade small? Why do I not double my trade size? I don't want to worry about the drawdowns. I want to manage robots that are just do your thing, right? Same thing on Hypertrend. I'll deploy Hypertrend. I'm going to trade it really small. This deployment right here is only one entry, but if it loses, it takes a slightly bigger trade size. I'll give it a nice, flexible leash where if it loses, I'm giving it I think this is 15 losses max, which means that I can start from a micro lot, build my trade size up to a 0.15, which margin wise is only going to be about $250 to $300 on, dollar crosses, 150, trying to think for a 1.5, 843. I got to write that down. So I had 225 and 397 and 221. So Perfect Storm Pro, Pockets Pattern Pro, and Perfect Storm. I'll double check those numbers. I think it was whatever. Anyway, 843 for the week on robots. I'm going to write that down. Now I can use the calculator. If I had a margin, so a mini lot on the pound is about $600. So if I did 1.5, I'm looking at about $900 a margin on a pound cross, which I have to be mindful of. So, I need to make sure that if I'm willing to go that high, I've not seen in these tests, looking at the overall trade sizes, I have not seen a lot of trades that have gotten up over a mini lot. So that essentially means that 10 or less is high probability. That's probably the biggest trade size I'll have. But in the event that I get to 15, I need to know if I'm trading 20 some currency pairs at 0.15 lots, what's my total margin, right? If I go on the high side, let's say that I'm in all of my currency pairs, they all cost the same as the pound. Okay, so if I was $900 in for a 1.5 or a 0.15 lot trade, $900 a margin, and I have 25 pairs running, my account needs to be decent, right? I would at least need to have probably $25,000 in that account. So considering that, that's going to be, for me to run full auto on 25 pairs, it's probably best to have a $10, $15, $20,000 account. Now, I would need probably $25,000 with a 50 to 1 leverage account. If you are non-US and you have 100 to 1 or 200 to 1, that makes life way easier. You've got a lot more margin to work with, and it takes that down significantly. Okay. Marie says, nope, I don't see it. Well, if you have an educational specialist, that's an easy way to find out some more information. If you want me to get you a link for it, you can send me an email or send me a message. I can try to find a direct link for you if you want to check it out. If you want to send me a message, are you in my Discord channel? If you are, just throw something in the group chat, and you can either private message me on Discord, send me an email, but I can get some information for you before the class today. Again, it's 1 p.m. Eastern time. Yeah, just hit me up on Discord or just let me know. Okay. Larry says the 182.50 is gone. I don't know what happened. Okay. Well, let's take a look at that. So if you have the 182.50 that's gone, again, that's not the one that should be gone. If you're getting assigned, you're getting assigned on the sell side. I don't know where the 182.50 is because that should have been a buy call. If you're a 180 sell call, 182.50 buy call, you don't get assigned on the 182.50, right? Expirations today, you don't get assigned. So 180 was the one, if there was an assignment to be 180, but I doubt that was assigned. So this sounds like you're going to have to look in the transaction history, Larry, and see if anything happened to that 182.50. I don't know what it is. But if it's a long call at 182.50, I mean, it's going to be up about $1.50 right now. But I don't know. Maybe that's in slight profit, but the 180 sell put's on the hook. And you don't want to carry that into the weekend because you're going to get assigned because that's a call. So if it's a sell call at 180, that means you have the obligation to sell the shares at 180 by expiration. I don't want to sell Apple at 180. That means I'm going to be upside down $3.40. I don't want to sell. Okay. We got the yen getting weaker. Man, could I scalp the New Zealand yen today? I couldn't convince myself yesterday either. It's like we're trading right up into these highs. I don't know. I'm just gonna let the 8 cap stuff go. Come on, dollar Swiss. Give me my break even or better. Here's my 8 cap running right now. So I'm right around break even from where I started the trading battle. It sucks. I was up around $1,000. I took a hit on the Aussie dollar. And right now, I just want to see if gold or the dollar Swiss cooperate. And once this balance, hopefully this balance gets back to, 10,500, maybe a little bit higher, but we'll see. So I'm just going to sit tight on that for right now. 182.50 was sold yesterday. Okay. Again, I don't know why. Did you sell it? Because it would have been a sell to close, right? Because it was a buy to open. So if you sold it, okay. If your broker sold it, that's weird. Because part of this credit spread, if you did this correctly, they shouldn't be assigning you or getting you out of that 182.50 at all. So the reality is this. If it was sold yesterday, was it sold for profit? I don't know. If you still have the 180 sell put, there's credit there, but I don't want to hold that into expiration and then get assigned. I'm not interested in holding Apple short. If anything, we're probably heading back up into the middle, and we're just going to be range trading on Apple. So I just want to make sure, before I just say, Larry, you good? That's what I'm going to ask you. Are you comfortable with what you have to do to handle this? If you still have a 180 sell put, you're going to take a small loss on that. If you had the long call, the 180 sell call, you don't want to get assigned, so I would close it out. But that's, again, it was a credit spread, man. I don't understand how you were assigned or how it was taken off unless you did it. Because when price is coming back down towards our credit spread levels, 180 by 182.50 bear call, that should not be assigned. It's trading at the money. So there's usually not assignments there. I know it's the day of expiration. But when we're right at the money, we're typically not seeing assignments. Usually it's like we're way off, like we were on the bull put side. That's why we got assigned. Okay. Just want to make sure you're good. All good. All right. Let me do a quick spot check on some of these switch pairs. Okay. Thanks, Murray. I'll get you. Give me a second here. I'll get you an email or I'll get you a link. I'll just post that in Discord for you, okay? And that goes for anybody else that's interested in Hypertrend. You want to check it out. Thanks, Donna. Appreciate that. All right. Aussie Swiss. Long on Aussie Swiss, looking good. Let's see if we are going to continue to push our way up towards these highs. I was waiting for this structure to break. Okay, if we break this structure to the upside, this looks much more promising for a big relief rally. One thing that's going to be interesting in the timing is it might have something to do with the old Fed in possibly May, not March necessarily, but possibly May, because of that rate cut cycle. We're seeing that the Switzerland inflation is going lower. I think their expectations were 1.5 year over year. They came in 1.2 or 1.3. If I go to inflation by country, let's see if this search pops up. So I go to G20 and let's go to Switzerland. 1.3 was the year over year. The previous was 1.7. So it's trending in the right direction. Very likely not going to raise rates any further. If they're along the same party lines as everyone else with, the Fed's going to cut rates, we're going to cut rates. Switzerland might be looking to cut rates from, 1.75, maybe cut 25 to 50 basis points. They have been very neutral for a long time, but they also held on to a negative 7.5 for a while. Negative 0.75 for years and years and years after the Swiss National Bank, Black Swan event in 2015. But they've gotten off of negative interest rates. The one bank that hasn't of the majors would be Japan. Japan inflation is still going lower, 2.8, 2.6, and they're still sitting at negative 0.1% interest rates. Again, the policy is going to change at some point. I don't know when. I'm not trying to time it necessarily, but I'm trying to recognize that when and if it's happening, there's a lot of opportunity to see this carry trade unravel. Okay, the carry trade's been on since 2023. Literally the first day of trading 2023, carry trade was on. So anything against the JPY has been pretty solid. The Swiss has been stubbornly strong, but we're starting to give back a little bit. We're hundreds of pips off those recent lows. So I think the Swiss and the JPY with positive carry are pretty attractive trades as far as buying and holding, or holding against the Swiss and holding against the JPY. The carry trade unraveling will likely be in the event that the Bank of Japan changes policy. That will be a big event. That will be thousands of pips, most likely in the Forex market. But I think the pain trade is going to be more upside. So if we go dollar yen, which is trading to 150 and change, which, by the way, again, I feel like I missed it. If we're gonna just pop up and flag, I should just be long dollar yen. If you check this on a 15-minute chart. I still don't even like that. It's just, I can't talk myself into a trade today. I need a little bit more time, and I wouldn't be surprised if we score a point at these highs at 150.90. But in case this gets choppy on the news today, I'm not going to buy in and chase it. But I was going to say, don't be surprised if we start to see on the higher time frames. Here's the weekly chart. Okay, you and I both know that this right here is where the sellers are really going to get confirmation. Okay, everyone trying to pick a top right here is in the danger zone, right? Everyone there is. If you have stop losses above 152, do not be surprised if it goes up above those highs. I don't know where, I don't know how far, but then I'll just draw a trend line there and I'll wait. We start going from inner trend line to outer trend line. We come back and take out these highs. We start getting on the right side of this trend line. That's when we're starting to talk about the carry trade unraveling. Okay. It could form a topping pattern like a head and shoulders. It can form a rising wedge. There could be all sorts of stuff it could form. I'll wait for that. I'll wait for that price action. Right. So I think that will be a big trade at some point. Maybe it's this year, maybe it's next year, but combination of timing of watch off the Fed decisions. The Bank of Japan loves to make these decisions right after the Fed. So if it's a March or May, let's keep an eye on that. If it's not this summer, but going into the fall with the election or post-election or the holidays this year from November to January with the way the seasonality kind of plays out with the Japanese yen, maybe that's the play. So I'm saying be careful. Don't call the top. Wait for confirmation. This is the easiest trade. There. If we break that trend line, I don't care that I've given up, 500 pips for an entry. I care that I'm right. I care that I'm confirming it. Let's go after that. Fair? Yep. Going to make new highs. I think so too. I think so too because that's the pain trade, right? I think right now in the stock market, that's the pain trade. Pain trade is higher, 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 higher. I mean, you're getting, Nvidia's up. You've got everything that's recovered last year. There's clearly still some momentum and steam in these runs, and I get it. Like it's getting a little ridiculous when you look at a chart like Nvidia or look at a chart like SMCI. That's insane. SMCI literally looks like a GameStop. There's something like it looks broken, but that is enough momentum. And these companies, just by market cap alone and stock price, are growing so quickly that Nvidia is now the third most valuable company in the world, right? Largest market cap. It overtook Google this week. It is crazy. That being said, are we topping out at 500 and 5,000 on the SPY or the S&P? I don't know. Maybe it stumbles around this area for a while and has to make the next decision. So if we fumble around here for a while, the next decision is this capable and justified of going higher, or are we going to see a correction? A correction back to all-time highs is not a bear market. It's a healthy correction. This is about a 6% correction. Okay? That's healthy. If a 6% correction on the SPY is an 8% correction on the NASDAQ, it's healthy. It's okay. Right? The funny part is like a 6% correction is going to be like, oh my gosh, recession is happening. It's going to be the worst possible news. And then it's going to be a buy the dip. And we're wondering like, well, what about this recession talk? What about this doom and gloom? Just let price do its thing. Price is going to move. Okay. So right now we're struggling at 500 and we'll see what plays out. We drift a little bit higher. Okay, cool. We drift back to CPI levels. Okay, fine. We look at this on the, daily time frame. It was pretty straightforward, gap trading this week where we had that aggressive gap lower on Tuesday, Wednesday, Thursday. We just filled the gap. So if we fade that gap, we're going to find out next week where it goes. Maybe we're some indecision now, right? Again, bear call spread, bull put spread, little iron condor action, make money if it goes in the middle, right? Stays sideways, goes nowhere. If it drifts higher, okay, well, iron condor is not the strategy. So I look at some inexpensive debit spreads and try to get a couple of bucks. I have that going right now until next week. If we get up, I need price to get up to 505, I get paid, or get back down below, 496, I get paid. So high probability, it's just let's get a little bit of movement. Okay. All right. If you do me a favor, you're watching live, I appreciate you being here. Hit the thumbs up button for me, especially on YouTube. And I don't know. What else you want? I've got some weekend sessions to schedule for some private instruction. I appreciate everyone reaching out. If you're interested in some private instruction, one-on-one or a small group, you can get the links on my Discord. It's just under the thread private instruction. I have a buy it now link for a 1-hour session, buy it now link for a group session, or just somebody wants me for 8 hours. That's fine too. But I've done a lot of those with groups of 5, groups of 10. I cap it at 10. I don't want any more than 10 traders. I want to make sure everyone gets plenty of time. Okay. But I've got to schedule those, and those are kind of going into my weekends. I'm happy to do. And anyway, looking forward to Hypertrend today at 1 p.m. This testing should finish up prior to class. We'll have more to share. Strategy guide is ready. Videos are ready. So assets are ready to rock and roll. I'll probably finalize the presets for today, hopefully before class. If not, we'll talk about the presets, and then I'll have them ready for you over the weekend. All right. So just one quick thing here, just some organization inside Discord. So free group chat, come on in. If you're not in or a part of it, here's a free link. Let's do this. Let me go free group chat, invite. That's weird. Invite friends. I just want to invite everybody. So I got Nick on here from A1 Trading. This says link expired. Edit it. All right, let me see if I can. So no expiration. There we go. There's my link. No expiration. Copy, and I'll post this. So this is Discord group. There's a link if you'd like to join if you're not part of the Discord group. Free chat for everybody. On Fridays, I post my blog, see how we did, what gains, wins do we have, how do we do, robot trading, auto trading, flex trading room, equities on demand. Crypto, I didn't even mention that this week. I'll finish that up in just a minute. So that's a blog. Twitter, anything I post on Twitter, I'll throw it there. A lot of heat map stuff. When I went live for the trading battle, same type of stuff, just share that. Any analysis, this is where I'm just scouring. I listen to a lot of content on the weekend when I go to the gym. Anything I like, charts, I take a bunch of screenshots on my phone. I share a lot of that stuff in here. It's just kind of timeless analysis and education. Education are all of my links, classes that I have, trials and trading, $27. Okay, this is a video series, complete video series I've had running. This is like evergreen content. That's great if you want to rent the videos or buy the videos. That's cool. Private instruction, like I said, individuals for 1 hour or workshops, again, for individuals or groups up to 8 hours. Affiliate links. I have some stuff out there in the industry. Dynamic Trends, which is an advanced option platform, advanced option software, which is awesome. It also includes, you can have like a I don't want to say base, but you have this awesome package that's just all things options, all thing markets. And then they have a zero DTE specific launch as well that goes into your advanced package, which is pretty cool. And if you want that software, you can subscribe it there. I can save you 2 months on the annual subscription. So for the price of 10, you get 12. Tasty Trade, if you're looking to trade stocks and options, I've got a referral code right there. There's also a promo going on until March 31st for my new bonus. That is, if you open up a new account or you do a transfer into Tasty Trade, ACATS transfers still work, cash margin accounts still work. You can get upwards of $5,000 for a bonus. I'll put it out there for a $5,000 bonus. It's a $500,000 account. So, but I've been opening up a lot of accounts in the 6-figure mark. So there's plenty of $2,000, $3,000, $4,000 bonuses that are coming in for those clients, which is great. That's Tasty Trade. Trading View. Trading Indicators, $50 off the portfolio back tester for MT4, MT5, 15% discount on any product in tradingindicators.com. They have a ton of indicators there, more than what you could ever imagine. And you can save money on all that by just using my promo code Pulver. If you want to save $50 on the portfolio tester, the promo code is KISS for Keep It Seriously Simple. I did that years ago with Daniel and his team. And then A1, if you've been joining me on Monday, Wednesday this week, I was live with A1 Trading. I was live with Nick a little bit on Monday, and then I did an entire session with Frank on Wednesday, which was a lot of fun. And they continue to offer some great promos for the A1 trading dashboard. It's the Edge Finder AI. So that is kind of all in one stop. You have hundreds and hundreds of data points all in one place. So sentiment, smart money, dumb money, best positions and setups, scoring, bank information, carry trade information. I mean, just tons and tons of information all in one dashboard. It would take 100 different browser tabs for me to find the information all in one place. So that's a good deal. It's also a lifetime purchase, and I can save you. I think this week they're running a promo for 30 to 35% off. So if interested, I appreciate if you use my link. That'd be great. I've had a nice little collaboration with them over the last 6+ months. to do a lot of FOMCs with Nick, and now I'm joining their live sessions during the week when they need me at 10 o'clock. Cool. All right. Blue Water, welcome. Nice to have some new followers here. Let's see here. Asked you about coin a couple weeks ago. I'm interested in your view. Let's take a look. Let's take a look at Coinbase and Bitcoin really quickly. Let me bring the charts back up. So let's go Coinbase. Coinbase is ripping up to these highs. See, is Bitcoin just pausing a little bit at the 52,000 mark? Yep, 52,000. We're pausing. We took out the highs. I did say this on Monday. Okay. I did say that if this is a potential broadening pattern, that's a very volatile look, but I don't know if that's the case. I mean, that gives us a pullback point to around there. I would say that at 44,000 or at 40,000, those would be my buy zone levels on a dip. Otherwise, if we have a little bit of pullback here, we could always just draw a trend line and get a move in. But Bitcoin has made a nice little run after that little pullback with the SEC approval on those ETFs. That was more than I expected. And now that we broke the 48,000 mark, broke the 50,000 mark, 68,000 is right there. So it's going to be correlated. So if you're looking at Coinbase, it will certainly be correlated. I'm not going to own stock on Coinbase, right? That would have been, doing some bull put spreads and credit spreads down here. I already have some exposure. So I'm in GBTC, and this thing's been crushing it. I've owned this thing since like $17. MARA is sitting in some profit. I did a roll this week. I went out and up. So I went out to June. I've got a $45 covered call. I've also got some credit spreads out of the way around $20, so I can just generate some income, lower my cost basis. And then BITO is another one. Also cracked these highs. I own the shares of BITO. I've got some credit spreads at 17 by 16, which is way out of the way. And so I'm just looking at generating income. Coinbase would be another one. There's some typically good premiums on this. If I take a look at an options chain, I'd probably look at like a 10 or 15 delta on Coinbase. And so maybe we can get down to like 150 or 140 and stay out of the way. Ideally, I'd like to get all the way down to like 130, 120. I'd probably go out 45 days or go out 60 days and put in a out of the money bull put spread. If I did a $5 spread, if I could collect $1 for that, I'd take that trade. If you give me like 2 minutes, I'll log into my Tasty account and I'll look at that trade and see what it's paying for right now. Now, the concern would be this. If we have some resistance and we have some support and this starts to fade, maybe in the near term, maybe just a quick bear call spread to generate some income. But I want to see how far out I can go, 45 to 60 days, and how much premium I can generate if I go, to a 10 or 15 delta. It should be a decent premium stock, I would think. Move this over here. Let me get logged in. And after today's session, I'll take this video. I'll have the live one archived on YouTube. So anybody that misses these live sessions are always recorded in my YouTube session and they're under the live session playlist. But I also take it and splice it into like a 60-second highlight. I throw that on Instagram and Twitter. Or I'm sorry, I guess I do Twitter, but Instagram, TikTok, because that's meant for those little short trades, right? Or the short videos. Okay, so let's go Coinbase. Like I said, 45 to 60 days. Here's my 41. Here's my 63. So if I go up to March 28th, here's the deltas I'm talking about. So I'm looking at deltas in this column. If you want me to make this a little bit bigger, or just squint, here's my delta column. And if I went out of the money, I could get down to a 10 delta, probably a 135 by 130. Not sure what it's going to offer me, but let's find out. If I do a bear or a bull put spread there, that's not terrible. I'd kill for 10 cents on that if I get 60 cents. If I did a $10 spread, I'd get, really? That's pretty terrible. So a $5 spread for 60 cents, a $10 spread for 65 cents, obviously not worth the extra risk. If I want to go up a strike and go 140 by 135, now I get $1.16. We're trading at 180, right? We'd have to have a pretty sharp drop. So 140 is my line in the sand, and I could collect 86 cents. If I went to 130, I collect $1.45. Now think about this. If I collect 86 cents out of $5, my buying power is reduced by $415. That's my risk around $380 to $400. Okay. If I did a $10 spread, now my buying power is reduced by $912. My max loss is 8 and change for a profit of $165. Now the probability of profits right here, 79% probability profit. Okay. Which is pretty high. However, in the event that we see a dramatic sharp drop, the deltas are going to change. This stock is going to show that you're upside down in value because you do have the higher spread and the higher risk as the delta changes. If that sounds completely foreign, like I'm speaking a different language to you, that's okay. Go into my YouTube session or my YouTube channel and check out Options 101. I talk about just it's 4 videos, 3 or 4 videos. And it's just a very simple breakdown of just getting started with options. And I would definitely check it out if you're interested. So I like this trade. I think the 140 is great. I think the 135 is a little safer. So I'd probably do something like this. The 130 by 125, the higher probability, 85%. I would certainly consider that one over the 140. That gives me $10 of additional cushion because all I need price to do by expiration is stay above 130. So if we stay above 130 right here, by the way, this is dropping pretty quickly. This was up to like 185 a second ago. 130 is a 26, almost 27% drop in the stock. So that gives yourself some wiggle room. Now, I would say this, if it stays above 130, you collect full income. If it gets to that halfway point and bounces here, that's fine. If it comes all the way back down, we've got to be willing to take the loss or roll it down. I would roll it down and stay out of the way and maybe do a 1 contract trade. And if I roll it down, maybe do a 2 contract trade. Keep the probability of profit really high. So there's a plan A and a plan B for this one. Okay. Those videos would help. So check them out. That's on my YouTube channel. So youtube.com/Chris Pulver. If you search in my library. So we're live right now. Hello, hello. If you search in my videos, go to options. And this is it's options 101, straddles and strangles. Options for beginners. This is the session I did Wednesday with A1 Trading where Frank joined me. I just walked him through trading credit spreads. Options 101, long calls and long puts. Options 101, covered calls turn winners into losers. So yeah, check those videos out. I think that'll help. That'll at least help wet your whistle in some options trading. Okay. All right, good stuff. I'll let you go for today. Let's start things up in Equities on Demand in 4 minutes. Just enough for me to take a sip of coffee. Cool. All right. I will let you go. All right. Thanks, everybody. Thanks for being here. Hit the thumbs up button for me before you go. Please, please, please. That'd be great. Keep supporting the channel. Let that algorithm know that you're here, you're watching live, you like the video. That helps me be seen by others and continue to see the channel grow. All right, cool. I will see you on Monday. All right. Thanks, everybody. Take care. Bye.